Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to Apply. All right, so today I have Russell Deacon on the line, and he is founding managing partner and CIO over at Asiana Group, SFO. And this episode is part of our Super Return Berlin series, where we bring you the best of those who attended and participated in Super Return, which recently took place in Berlin. Russell, welcome to the show.
Very nice to be here, Adam.
All right, Russell. So excited to get into today's topic. So finding alpha with niche VC funds, and also excited to learn more about Asiana Group as well and what you're doing there as founding managing partner. But before we do that, Super Return Berlin. Give me some of the backstory. Have you been in the past? Is this the first time? What brings you out?
So I'm gonna date myself a little bit, but that's okay. It does happen.
I
I've
like
probably
that. I
been,
like dating, man. That's good. Go
yeah. I
ahead.
I remember Super Return Berlin when it wasn't in Berlin, when it was actually in Frankfurt, and believe it or
Mm.
not, it was in Munich. So it has been on my calendar for over 20 years. I hate to say it, maybe
I
approaching
don't hate to
25.
say it, Russell. You have the record now. I think the previous, I've been going for records here, and I think the previous was like maybe 12 to 15. I know nobody approached 20. So
Okay.
congratulations. Your prizes. I don't really have them, but we're going to reach out to the organizers. Go ahead, please. That's amazing.
Yeah, it's definitely one of the highlights of the calendar year. You got to put a lot of time into it to
Mm.
prepare. Frankly, even though I've been doing it so many years, I still get my preparation, my team to start preparing 8 to 10 weeks out because it's just so busy. And if you don't put in the
Wow.
time to get organized before, it becomes too much of a zoo. And those who prepare properly, it can be very, very enjoyable and productive, which it was
Mm.
this year.
Because you've been going so long, I'm so curious. Like, how have you seen? I haven't been able to ask this questions to others as of yet, but how has this evolved for you? Like, as you've seen it, just high level, how has it evolved? And I guess it's kind of two part. How has it evolved, and why do you stay so loyal to going yearly? Because obviously, there's a benefit, a lot of different ways you could be, spending your time.
Certainly. I mean, one of the things that I think it does, it's funny because even for those fundraising, and in our case, where we are investing in funds, it's still a pretty inefficient system. And to be able to have in one location where, frankly, you have GPs from Asia, from Europe, and the United States, and even other places such as South America and to a less extent Africa, it is an efficient way if you organize yourself to meet a lot of managers around the world in a
Mm,
very short period of time. And even perhaps as important, if not more important, I spend probably 40% of my time talking to fellow LPs and
mm,
talking about other funds they've met and their insights. And I'm happy to share. They share with me. I probably spend 25% of my time talking to GPs.
mm,
People say, well, maybe that's a little less, but that's good because I also then leave the other part of the time to serendipity. There's a lot of
mm.
serendipity that goes on. It is the most social event of all the super return, and frankly, large industry-wide conference that I go to, and it's worthwhile to do that serendipity and the social events. So
Mm.
it's quite the marathon from 7:30 a.m. to at least midnight. When I leave after 4 days, I'm pretty tired.
Then it's super sleep. No, I'm just playing.
Yes, on the way back home, it
Yeah,
is definitely
exactly.
sleep well on the plane.
Amazing. Let's switch it up a bit here. Maybe give us a little bit of an overview of ACN Group and what you're doing at the firm.
Sure. So I founded Asiana Group in 2006. Before that, I was a partner actually in Latin America and Brazil's oldest venture capital private equity firm. So when I actually emigrated to the US for the third time in 2006, we moved to Miami and I was raising a fund for a venture capital private equity firm called CRP. And at the same time, I started to then think about, well, what am I going to do? I need to diversify. And I started investing off my own balance sheet. And then
Mm,
from 2011, just started to do it full time. And that's we have a team of 6 people, two go between India and Turkey, one in Brazil. I'm in Miami, two in Palo Alto, and we invest internationally as well as in the US in a lot of private markets, mostly venture growth capital. And we'll do co-investments as well as successful portfolio companies of the fund managers. When their portfolio companies raise another round, the venture firm goes in, we'll consider going in as well. And
mm,
we just sort of expand on that. I guess today we have Our current portfolio is probably about 20 funds we've invested in, probably 50, 60 co-investments, and
Mm,
something I really enjoy. And there's always new things. And we'll talk a little bit more how that's evolved over the years. But
hmm.
that's my basis, my background, and that's what I continue to enjoy doing, and hopefully will do for many more years.
Amazing. What do you enjoy about, and I want to use the right word, but I use the word hunting. So not hunting, but what do you
Yeah,
enjoy about finding new funds? That's probably a better word, finding new funds, new fund managers, and kind of that sifting process of what's next. Like, what do you enjoy about that?
I'd say one is intellectual curiosity, especially if it's venture and growth capital. It is sort of an eye on the future. I actually was speaking to a gentleman, family office, very successful, a large billionaire family who actually did a lot of investments on hedge funds and in public markets. And I said, really? He goes, well, with one exception we have, we actually also do venture capital because that is an eye on the future versus an
Mm,
eye on what's going on. So I think it's the intellectual curiosity that I enjoy. I've lived on three continents, so I think I'm fairly good at connecting dots and seeing trends and then taking them to other places or seeing that. And
mm,
I enjoy different cultures. I was, a foreigner in a couple of countries growing up, and I just think it just makes life much more interesting. And we're lucky. We're in an industry where there's a lot of bright people, a lot of bright ideas, and I often just come away feeling very optimistic about the future. Although obviously we have some real serious issues going on
mhm,
in the world, I think I'm always, let's say, realistically optimistic. And a lot of that comes from finding good fund managers, good people, even more
mm.
important. And that's what we find in when we go talk to and meet a lot of managers. And there's many, many managers that are very good. And I apologize, I'm not investing. I can't invest in all of the good ones, but
Hmm.
we fortunately have invested in good ones as well.
Amazing. So you've kind of hinted towards it, but maybe let's go a little bit further into how your investment strategy has maybe evolved and where it's at like present day.
Sure. So 2001 was the first time that I sort of invested off my own balance sheet. And I remember back then I was a venture capital partner in Brazil and obviously had exposure, which was fine in Brazil. And I'm like, if I'm going to do something else, I need to, I've always thought in dollars. I'm like, I need to diversify and I
Hmm.
wanted to start investing. It was actually in Silicon Valley. And we did a fund of fund for co-investments in the top Silicon Valley GPs. And that was, I think, the right way to go because on that case, fund of fund with that diversification, it stopped me from making a mistake or let's say concentrating on one fund manager only, which if it didn't do well,
Hmm.
obviously, if you don't start well, you don't finish well. And one of the things,
Yeah.
Warren Buffett started well, and that's why he's known. So fortunately, I started well. My first investment gave me a 3x net return. And then
Mm.
I was, and then started going more into funds. And as I matured, it goes from general funds to now what I do. I like funds that have deep technical vertical expertise and often 15, 20 years experience in that
Hmm.
vertical. Doesn't mean I don't do first time funds, but I won't do first time investors. And obviously there's a big difference. And we've moved a little bit probably because of the valuations. We no longer really invest in large funds, large buyouts. I think there's a space for them. And we even have still in our portfolio one of funds of the largest buyout funds. It's kind of
Mm.
like what I would say is leverage beta. But we've
Can you
gone
define
more
that
and
real quick? The large, what do you mean by large? Like what's the size when you say that?
so
Just
when I say
briefly.
that, I'm looking at, we actually found a group that was very interesting. They did a fund that invested in terms of defined by AUM, the largest PE
Mm.
buyout funds. So think of Carlyle, think of KKR. So how many
Okay.
people, 5 billion is probably the smallest fund within that, right? 5, 15, 20 billion.
I got it.
Um,
Okay.
and on that basis, I consider it leverage beta. Over the last 40 years, it's really, if you look at it, 14 and 17% net, 400 basis point of the S&P, which is fine. It's a nice building block in my portfolio. But
Hmm.
I'm more, every family office is different. We as a family, we have operating businesses still in Brazil, real estate developer. We also own productive farm, which is rice and cattle. That provides us cash flow. And given my
Mm.
experience of being a partner in a venture capital firm, I'm more alpha seeking. It's almost a
Yeah.
bifurcated model. And I can afford to do that. So on that basis, we've gone to smaller funds over the evolution, funds that are even some of the ventures definitions have changed. I don't believe in a venture fund being $1 billion. To me, that's not really a venture fund. Venture
Mm-hmm.
funds, I think the sweet spots are more than 100 to 300 million. Now they're considered
Mm.
niche funds. That's the way that used to be. The smallest venture funds in Silicon Valley used to, believe it or not, be $10 million way back when. Um,
Wow.
and
Yeah.
I think there is much more alignment between GP and LP when the funds are smaller. They're not, and this is my own personal opinion.
Mm-hmm.
There are examples of very successful large funds as well. But for us, given what we like to invest in, looking at alpha, looking at we're underwriting at 4 and 5x really is some of our targets. We think that the niche funds, when I would define funds from 50 to $200 million,
Mm.
focus on a very specific technical vertical expertise, whether it's deep tech, for example, one of my most successful investors, whether it's an
Mm-hmm.
AI fund based looking at healthcare, whether it's an AI fund based looking at manufacturing, a biotech fund. We've looked at in the past also a fund that really focused on the intersection of a little bit later life science, but with later stage venture. So there's nuances along that, but all of these
Mm-hmm.
funds where the managers are really focused, taking advantage of the 10, 15 years of experience they have in investing, and they can do, I think, smaller funds. If you're investing in earlier stage seed and series A, there's obviously more risk, absolutely, but there's more upside, and we're comfortable with that. And that's
Mm.
what's evolved over time. We've gone into smaller funds and we've gone to more funds with vertical expertise rather than generalists. And
Mm-hmm.
fortunately for us so far, that's worked out well over the last 5 or 10 years.
So considering these, so you're seeking alpha from finding alpha in these niche VC funds. You mentioned deep tech. Maybe go a little bit further. And you don't have to name any specific funds or anything like that if you don't care to. It's not, but whether it's sector or otherwise, like what excites you right now in the market? Like what are you looking closely at?
Sure. And if at the end of the interview, I'm happy to provide my LinkedIn details, etc. And people can reach
Hmm.
out to me. So I'm happy to provide it more on a one-to-one. I don't think that
Wonderful.
it's
Hmm.
appropriate for me to solicit or to tell people the names in public forum, but I'm happy
Hmm.
on an individual conversation. So what are we doing at the moment? And this, I'll give you an example. We just signed a new VC. We do quite a lot in the Silicon Valley, but not only in the Silicon Valley. This happens to be Silicon Valley. And you're always looking for a competitive advantage of a niche. And sometimes the industry, the focus, I was a deep tech fund, is what is important. That's going to be more, I think, prevalent, and it's an overused word. But what we found, I'll give you an example. We've just signed a term sheet this week on a fund. Yes, this is my second deep tech fund. Their focus is, I think the trends are easy to find, but they've done something I think is very unusual. They have had, because of the founder of the fund, he went to Stanford, he went to Berkeley. Believe it or not, the number one and number two universities on a worldwide basis for startups is Berkeley for the number, and Stanford just a little bit behind because it's a smaller school, but per capita,
Mm.
that more. He has extremely strong, his operational focus and extremely strong contacts and meeting with these entrepreneurs when they were still at university. So that's an advantage that few people have. And
That's
that's an
so
access.
interesting to me. Wow, that's so far. I don't know if that was intended in the beginning or far reaching, but that's so interesting. When you say it, it makes perfect sense. You're like, that's an inside edge, right? That's
Yeah,
that's
it's an
amazing.
inside edge, right? And in the end, we invest, Adam, as I get a bit older, the numbers, the track record is important, obviously. But
Hmm.
yeah, I invest in people and I'm fairly experienced and fairly intelligent. And I like to be the dumbest guy in the room with the least experience in the vertical. Because that's why I pay the
Mm.
management fees. And if I can find someone who has that edge and that nuance, and it can sometimes can be from technical nuance, it can be from access, it can be different strategies. It's not a unique thing, but that type of edge or inside ability on that case of that with the alumni. Another one we're looking at is very much linked. We're in the process of doing work very much linked, similar with the alumni of Georgia Tech, for example. Very, very strong incubator linked with that insight. And it seems that if you get into these founders and successful people earlier, then you have the ability not only to have access, because let's be honest, a lot of venture capital and growth funds and small funds, where we tend to play with funds in the region, let's say the smallest will be 50 million, the largest will be a billion, but let's say our sweet spot's 100 to $300 million. Access is an issue because the funds are small and very good funds. A lot of people want to get into it. So even as a GP, it's also access to get into good people. It's evaluating people and working with people and having access to people as a GP, into the founders, or me as an LP having access to the GPs. All of that, people have become much more important as I look at my valuation, as
Mm,
well as if I ever made mistakes, it wasn't the analytics, it wasn't the objective, it was not evaluating the people well, because some people who are very difficult, if they're a GP, then the founders of the portfolio companies will not follow them into the fire. And that's not good. If the founders are very difficult people, they won't
mm.
listen to good information. It's not about intelligence. It's not about, persistence. So these nuances, these sort of more soft reads, and I can perhaps credit that to my wife because she's a PhD in psychology. Something has worn off after all these years of marriage.
I love it. That's amazing. Uh, Russell, this has been great having you on the show today, learning more about your work. And there's been a great addition to the Super Return Berlin series that we're creating. So thank you for coming on. And you mentioned before, if somebody wants to contact you, maybe on LinkedIn, but also a website, LinkedIn,
Yeah.
like how do people connect? What's the best way?
Probably the best way is through LinkedIn, but we can also look at my website. It's www.aceana Group, ACEANA Group.com. Between one of those
Mhm.
two, feel free to reach out to me and then we can respond. And as I said, I'm happy to share more. We do a lot of Zoom calls with fellow investors. I exchange ideas, get access to new funds. I enjoy helping, I enjoy sharing. So I'm happy to do it as well.
Amazing. And for everybody listening, just so you know, we'll definitely put some links in the show notes so that you can connect with Russell on LinkedIn and also check out the website. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. You heard me correct. Each and every day, we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way on your journey as well. So hit that subscribe or follow button. And Russell, thanks again for coming on the show.
Greatly enjoyed it. Thank you very much, Adam.